Hey guys, welcome back. Patrick here. It's a new year, but thankfully for us, there are plenty of SPACs to investigate. Today in this review, I want to look at AST Science, a company that's going to be merging with NPA. This is a very interesting company and cool technology that we're going to be looking into. But the big question, you guys know it is it going to get my seal of approval? So you know how I structure these videos. I'm going to start by looking at what was the company doing before, like what are they even trying to do? Then we'll look at their execution plan with the merger, then the valuation and financials, and then finally, how am I going to be playing this stock? So let's get started with that. But of course, please like and subscribe. It really helps out. And you have about until January 15th to create a WeBull account and get those 4 free stocks. I actually have been using mine right for the past 2 months, and it's been working pretty well. Get to trade off hours. Sometimes it gets to be pretty handy. So let's get started now. All right, friends, let's get started. So what is this company about and what are some of the basics of the transaction? Well, I'm sure this has happened to you. You're driving, you're talking to your friend. All of a sudden, you get to a dead zone where there's no cell towers close. You lose connection, so you get a dropped call and you lose internet access. This happens all the time, even in North America. Well, throughout the world, this is very common, right? There's a lot of countries where the cell phone coverage is very spotty. So this is what SpaceMobile wants to fix. They want to send out a network of satellites in space that will really give coverage throughout the world. So no matter where you are, at all times, you would have a cell phone connection if you so choose. So right now, this type of technology does exist. Satellite phones are already in the market, but it is a different type of phone. So you can't use the one you have in your pocket right now. You need to buy a different one. So this is what their competitive advantage is. Their technology works with the phones that people are using right now, so they would not need to buy a new one. And according to them, there's already 5 billion phones where this technology would work. And then this is 4G and 5G enabled, so it is future-proof for now. So once these satellites are up, like a lot of countries, especially right now in the first phase, they want to focus on Latin America, Africa, and India. Those would be their first markets. And then over time, they would expand that throughout the world. So this is what they want to focus on. That's the basics of what the company is about. Now, the investor presentation is one of the best I've ever seen. I'm going to link it in the description for your convenience. I strongly encourage you guys to go read it. They really give you all the information that you would want to see. So the company is going to get 232 million from the SPAC, 230 million from the PIPE, right? So there's going to be like a decent amount of PIPE, but not too much. And then what's really important is that the current shareholders are going to be locked for 12 months, meaning they're not going to be able to dump all of their shares and create that huge selling pressure. So same for the employees, they have a 2-year lockup period. So the company is going to be worth about 1.4 billion. Of course, that's the IPO price. We'll look at that later. And then after the transaction, they will have 423 million in proceeds, which is going to be enough, according to them, to fulfill their first phase. So this is kind of what it would look like from space. Each one of their satellites has its own zone of coverage that is overlapping. And then when they have enough satellites up in space, that's going to provide coverage for the entire world. So they've protected this technology with 750 different patents. And that's why that is one of their moats. They're not going to have direct competition right now, especially because of their business model. So if they were trying to go head-to-head with like other cell phone coverage providers, I would be very skeptical. That would be a red flag because those guys already have the infrastructure in place and they already have the customers. So the fact that they're not trying to do that is much better. Instead, they're trying to do this as an add-on service. So if you look at it, right, this is what they're talking about. Built-in customer base ready to be turned on. What they're trying to do is partner with cell phone providers that already have customers and provide it as an add-on like this. You're out of coverage. Would you like to turn on SpaceMobile Day Pass? Yes or no? So let's say that you do yes, then they're going to be sharing the revenue with that cell phone provider. So some of their partners right now are Vodafone, which is one of the bigger one outside of North America. And then you have AT&T. Then you have other ones that are, I don't know all of them personally since, I'm in North America, but I would assume that these guys cover a lot of different customers. So this is how the company is going to do its business, right? They're not trying to compete with those providers, which then if they did, those guys might want to create their own satellites and do the same thing. But since they're going to basically get 50% of the revenues without having to do anything, that's why it's a win-win type of partnership, it looks like. Before I get into the financials, I just want to show you guys the size of the market, and it is huge. We're talking about $1 trillion. So even if the company can only get a small fraction of the market share, they will generate billions of dollars in revenues each year. It's undeniable, right? So if they can execute, and the if here is extremely important, right? So in the first phase, let's focus on that one, right? First phase would be 20 satellites in the equatorial countries, covering those countries. So you would have Latin America, the north part of Africa, and then you would have India, which is currently very underserved. So we'll look at their projections later, but for now, I just want to show you guys that for those countries, right, Vodafone, which is one of their big partners, cover 540 million population, right? But in those same countries, there are 270 million people that currently don't have cell phone coverage. So this is a huge opportunity for the company through one of their existing partners. This is 270 million people that could be tapped into to become new customers of not only Vodafone, but also SpaceMobile. That's why it's such a synergistic partnership between these different companies. Now, this is for the countries that Vodafone actually covers. But in total, for the phase one, it would amount to a little over 700 million unconnected people. They have the final number here. The grand total would be 729 million. So you guys can see this is a massive opportunity if they can deliver. Look at a timeline for the company to start generating revenues. So a little over a year ago, they did their first test satellite, which was successful. They started collecting data and validating the technology. So that is amazing. In 2021, they're releasing a second test satellite. So as of now, this is very much a pre-revenue startup company. There's not a lot of substance. Everything we're talking about is pure speculation on what they might be able to do in the future. Finally, in 2022 is when they would release the first 20 satellites that would be commercial. And if they can do that, then finally they'll start to generate money, right? That's the end goal for us as shareholders, is for the company to get a lot of revenue so the share price goes up. So one of the good things, though, to be fair, is that they've already established their vendor network, meaning that they already know all the partners to build the satellites and send them to space. So they figured out this part. Now all they need is the money to actually execute on the plan, which does bring me some concern. According to them, it's going to cost them 551 million for the first phase. This includes building a satellite, sending them out to space, the operating expenses, and all of that. But they're only planning on raising 551 million. That means that their funding is very tight. I mean, I'm very concerned that they're going to run out of money, and then they'll have to raise more, which of course is going to dilute the shares. So that is not like the best part. I'm a little skeptical about that. But if they can execute, right, there's no doubt it is a huge opportunity. We were talking about the size earlier, 270 million just with Vodafone. Well, projected subscribers in 2023, they could get to 9 million and then really scale that up every year, double or more. So 44 million in 2024, 108, 234, and then 373. And this is mostly just for the equatorial countries. This would translate into very large revenues, 181 million in 2023, then that would jump to a little over a billion in 2024, and then very large increases every year, 2.6 billion, 5.8, and then 9.6 billion. So 107% compound annual growth rate over those 3 years. So what do you guys think about these projections, right? This is a pre-revenue company, and we've seen this time and time again, where based on the size of the potential market, right, we're talking about hundreds of millions of potential customers, they have these gigantic projections. Always keep in mind, some of them are going to succeed, but many of those companies will not, right? So it is very high risk, high reward. If you hit on it, like, your investment is going to grow massively. But if the company fails, you can lose a lot in plays like these. So one of the ways that they are trying to mitigate that, right, and lower the risk, is they're not trying to do everything themselves. That is one of the very good positives for this company, is that they have all these partners in different countries. So SpaceMobile is not going to be like doing ads on TV trying to acquire customers. They're going through the companies that are already in place, like Vodafone in these African countries. So that is the the company that is going to try to attract more customers, do the customer service, and all of that. SpaceMobile is focusing on the back end, which is the satellites and getting the technology to do what it's supposed to, right? So this mitigates some of the risks. If we look at the breakdown year by year, we can see that in 2030, which we know is pure speculation. I mean, this, like, I don't know why we try to project 10 years down the line, but anyway, they think that they could get to $16 billion in revenue. If they can achieve that, it's pretty obvious that the share price right now, valuation of about 1.4 billion, is going to grow significantly. So based on this, though, in the next 2 years, so 2022 and then 2023, you guys can see that they plan on losing a ton of money. Because that's the deal with this type of business, is that there's a lot of capital expenditures. They actually have to build satellites and then send them into space, right? So that costs a lot of money. So they do think that, yeah, they can get to EBITDA positive in 2023, but since they plan on starting to roll out their global network, well, they would spend 925 billion on that. So for those years, right, they would lose 697 million and then 797 million. Finally, in 2024 is when, like, the bulk of their network would be complete, and then this is when the company could start to become a free cash flow machine, and like that's when the company would really start to blow up. Because, I mean, total revenue 1 billion as we were looking at, but because they have such a good margin, since they're only working on the back end, I mean, at the end of the year, they would get over $1 billion in free cash flow. And then year after year, that would go up a lot, right? 2.5 billion, 5.6. Right? And as their global market grows and they can get a better market share, I mean, the company is just going to generate billions of dollars. So again, as I talked about earlier, there are a lot of ifs involved here. Plus, as I was talking about earlier, right, when they do their global network, they're going to have to raise more money. They already talk about it in this investor presentation. Projected capex needs of 1.4 billion to fund subsequent network build phase 2 plus through 2024. Meaning they don't have the money now to reach all of those projected revenues we were talking about. They are going to need to raise more money, which is going to cause dilution. Keep that in mind when we look at valuation. We take a quick look at the valuation. You want to look at the number of shares after the merger. 181.55 million shares multiplied by the current share price of $13.58. Then you subtract the 423 million that they're going to have in their bank account, and that gives us a current valuation of $2.04 billion. This is from 232 million from the SPAC, and then 230 million in PIPE. This translates into 13% shares for the SPAC shareholders like us, and then 13% from the PIPE. So again, like the ratio here is pretty common, right? You guys know this. And then one of the more important thing is the 12-month lockup for the current shareholders. This is very important because we've seen this many times before. Like, you really don't want to hold these shares from the SPACs, and then after the merger, you lose 50% of your value. That's what creates a lot of selling pressure, and people want to dump their shares before the merger because they don't want to lose that 50%. So if we have more SPACs like these in the future that have these pretty strong lockup periods, that's going to help a lot with reducing those big dumps after the merger. Here's the thing with this company is that there's no real comps. Like, they want to compare themselves with T-Mobile, Verizon, or even other SPACs like Hyliion, Lordstown, Desktop Metal, and Luminar. But the thing is that there's really no other companies in this space that is pre-revenue. You can't really compare SpaceMobile with Verizon that's been around for decades, has millions of subscribers, and has the whole infrastructure already, right? It's not an apple-to-apple comparison. So when we look at the 2.04 billion valuation, like, you have to decide for yourself, is this too much? Is this too little? Like, is there a discount there? I mean, the comps don't really give us very good, precise information. Right, guys, before I get to the conclusion, I do want to talk about some of the risks. So right now, this has broad-based support, especially in the United States, right? The Senate doesn't want all of these dead zones throughout the country. So right now, it has bipartisan support. But also, you do have to keep in mind that this is going to be the battleground in the future. I do believe that sincerely, that in the future, like, you have all these countries that have competing interests in space, like the United States, Russia, China, and then you have India. All of those countries have their own satellite programs, and they don't want, like, satellites from other countries just communicating with their citizens unrestricted, especially in China, for example. So keep that in mind, right? There's going to be intense scrutiny by the governments. Plus, you have NASA. It's very concerned that right now, with the size of the network that SpaceMobile wants to develop, it increases the likelihood that there's going to be space collisions. So NASA is working with SpaceMobile. So far, so good, right? They're going to try to mitigate that, but they're always going to be subjugated by the government agencies, right? It's not SpaceMobile that's going to decide what happens in space. It is the governments. Alright guys, in the wrap up, what do I think about the company? How am I going to be playing it? And does it get my seal of approval? I'm going to have to give this company a very weak seal of approval. I see a lot of potential. If everything goes well, I think that this is going to be a great risk versus reward. But I have to keep it very small because, like, I do see a lot of risks involved. They're only raising $541 million. I mean, to me, that is not enough. The company, if anything goes wrong, they'll lack money. Plus, also, they plan on spending $1.5 billion in the next few years to start not only phase 1, but also phase 2. So where are they going to get that money? Right? They're going to have to either dilute the shares or they're going to need to take on debt. So because of that, like, I'm very tentative about it. I do want to open a position in the company, but it has to be at a great price, and I can't make it very large. Like, I'm not going to buy 10,000 warrants or 10,000 shares of this company. So if we look at it in the short term, I mean, there was a lot of momentum. Like, this company has a lot of meme characteristics, and that's one of the great aspects of it in the short term. A lot of it kind of reminds you of Quantumscape, a company that doesn't have any revenues right now, may or may not succeed in the next 7 years, right? But if they do succeed, it's going to be huge. Well, that lots of similarities with Quantumscape, and look at where the company is now, $30 billion, and the share price went above 100. So in the short term, I think it's worth the risk for me, but I'll call it a gamble. So because of that, at 1358, right, I am willing to open like a position. It's going to be a small one. Remember, this is my investment. It's not financial advice for you guys. So 1358, I like it at that price. It has to be under 15 for sure. And we'll see. If in Q1 the SPAC market stays strong, I'll make good money with it. But if it doesn't, I'm not going to lose too much. Like, I always think about the downside protection for this one. So that's how I see it. Let me know in the comments how you guys think about this one, right? Long term, I'm personally going to wait and see for more confirmation. Like, if they get closer to phase 1, where they're almost ready to launch those 20 satellites, then I think that this is going to be a great long-term buy and hold. But I'm going to have to wait until we get closer to then before I actually like open a big position and put off my money. If I miss it, no big deal. Like, that's what people don't really understand sometimes, that it's not about hitting all of the good SPACs. It's about increasing the odds that you get the good ones. What I mean by that is, if I compare this company with like BFT, for example, BFT, I don't know how big the company is going to become, PaySafe, that is. I don't know if it's going to outperform PayPal in the future, but I am 99% sure that the company is going to go up. This company, I'm pretty sure it's going to go up, but maybe not. So that's why like BFT would be a bigger position than this one. I hope that makes sense. I hope you guys actually like learn something or appreciate the insight. Let me know in the comments. So let me know what you guys think. I really appreciate you watching the video. That's how I'm going to be playing it. I'll see you guys later.